Welcome back, and if you are new here, you are in the right place at the right time, because what I am about to share could put thousands of dollars back in your pocket. Real money, money the government already set aside for people exactly like you. And yet most retirees never claim a single dollar of it. That is the part nobody tells you. There are tax credits hiding in plain sight. They sit quietly inside the tax code year after year. And every April, millions of older Americans walk right past them. They overpay. They leave thousands on the table, and they never even know it happened. So stay with us all the way through, because by the end of this video, you will know exactly what to look for. You will know the names, you will know the forms, and you will know how to claim what is yours. Let us get straight into it. The first hidden credit is one almost nobody over 65 claims. It is called the credit for the elderly or the disabled. It lives on a form called Schedule R. The IRS created it specifically for older taxpayers, and yet the numbers are stunning. Out of millions who qualify, only a tiny fraction ever file it. Here is how it works. If you are 65 or older, you may qualify. If you have a modest income, the door opens. The credit can be worth up to $7,500. That number shifts based on your filing status and income. But the point stands. That is real money, and it is yours by law. Now the question you might be asking is this: why does nobody talk about it? Because the income limits are tight, because the form looks intimidating, and because tax software often skips right past it. So people assume they do not qualify. But assuming costs you. Always check Schedule R. Always. The second credit is the Saver's Credit. And yes, retirees can still earn it. Most people believe it is only for young workers. That is the assumption. Here is the reality. If you are still working part-time in retirement, you may qualify. If you contribute to an IRA or a retirement account, you are in the game. The Saver's Credit rewards you for saving. It can be worth up to $1,000 for single filers. For married couples, it can reach $2,000. Think about that for a moment. The government pays you to set money aside, and still the vast majority never claim it. The catch is the income threshold. It is designed for low and moderate earners. So many retirees with part-time jobs fit perfectly, but they never file the form. The form is called Form 8880. Write that down. Form 8880. It could mean $2,000 back in your hands. The third credit is one of the most overlooked of all. It is the credit hidden inside your health expenses, specifically the premium tax credit. Many retirees who are not yet on Medicare buy their own health insurance. They use the marketplace, and they often pay far more than they should. The premium tax credit lowers the cost of those plans, and recent rules expanded who qualifies. Before, there was a hard income cliff. Now, more middle-income retirees can claim it. Some receive thousands of dollars in reduced premiums. Others get a refund at tax time. Here is the consequence of ignoring it. If you bought a marketplace plan and skipped this credit, you overpaid, month after month, dollar after dollar. The form is Form 8962. It reconciles what you paid against what you owed, and it can hand you a substantial refund. That is money on the table, and it is sitting there right now, waiting. The fourth credit reaches into something deeply personal: caregiving. So many retirees today are caring for someone, a spouse, an aging parent, even an adult child with a disability. And the costs add up quietly. They drain savings without anyone noticing. The credit here is the credit for other dependents, and alongside it, the child and dependent care credit. Most people think these are only for families with young kids. That is the assumption. The reality is different. If you support a qualifying relative, you may claim up to $500, but it goes further. If you pay someone to care for a dependent so you can work, another credit opens. It can cover a percentage of those care costs. For many retirees juggling part-time work and caregiving, this is a lifeline, and yet the paperwork scares people away. Do not let it. The instructions walk you through it. The dependent rules are clearer than they look, and the payoff is real. This is money set aside to honor the work you are already doing, the work of caring for the people you love. Now we come to the fifth credit, and this one is the most forgotten of them all. It is the state-level property tax relief credit. The federal government gets all the attention, but your state may owe you too, and the amounts can be enormous. Many states offer what are called property tax circuit breakers. The name sounds technical. The idea is simple. If your property taxes are high compared to your income, the state gives you relief. Some states send a check. Others reduce your bill directly, and seniors almost always qualify for the best rates. But here is the heartbreak. These programs are not automatic. You must apply every single year, and the deadlines are easy to miss. So thousands of retirees who qualify never file. They keep paying full price. They lose hundreds, sometimes thousands, year after year. That is the part nobody tells you. Call your state revenue office. Ask about senior property tax relief. Ask about homestead exemptions. Ask about circuit breaker credits. The phone call alone could be worth more than a day's work, and it is your money, by law. So let us bring this all together now. Let us recap what we found, because the total is staggering when you add it up. The first was the credit for the elderly or disabled, Schedule R, up to $7,500. The second was the Savers Credit, Form 8880, up to $2,000 for couples, both ignored by most who qualify. The third was the Premium Tax Credit, Form 8962, thousands in reduced health premiums. The fourth was the credit for caregivers and dependents, up to $500 plus care cost relief. The fifth was your state property tax credit, hundreds or thousands every single year. Add those together. For many retirees, the total reaches well past $10,000, sometimes far more across several years. That is not a small sum. That is a vacation, a home repair, a cushion for an emergency. That is real money, and it is yours by law. So here is what I want you to do. Do not assume you do not qualify. Assumption is what costs people everything. Pull out last year's return. Look for these forms, and if they are missing, you may be able to amend and claim them. You worked your whole life for this security. You earned every protection the system offers, so claim it. All of it. Do not leave a single dollar behind on that table. If this video helped you understand even one of these credits, hit that subscribe button right now. Do it so you never miss important financial information like this again. And please share this with someone you love. Share it with your spouse. Share it with a friend at church. Share it with a neighbor who is counting every dollar. Because the people who need this most are the ones who never hear about it. And together, we can change that.